Hello and welcome everyone for another weekly market commentary from StashAway. With me again, our Chief Investment Officer, Freddy.
Hi.
We're glad to be back with you. Lots of things are happening this week, right? As always, actually, right? We say this every week, but it's actually happening every week. A couple of household items in the beginning. We have a few events coming up. On the 23rd of October, we actually have a How to Plan for Your Retirement Ask Me Anything event. That's on the 23rd of October. And you can sign up for that event via our Eventbrite link that you can see down below or in the picture right now. You can also go to stashaway.sg/academy to find that there as well. In Malaysia, we have something a little bit earlier. That's on the 9th of October. It's going to be a StashAway inside of StashAway, a deeper look in what we are as a company, and you can ask lots of questions about us as well. So that's on the 9th of October in Malaysia. Again, feel free to click on the link in the picture or below this video. Otherwise, always head over to our StashAway website for that. With that being said, Freddy, lots of things happening, but let's talk about the ceremony yesterday, right? We had 70 years of
70th anniversary. Ginormous display of military power.
Yes. Everyone is in awe. In the German news I read this morning.
But the key about the presidency's speech on the ceremony was unity. Well, you can also see that as unification, and so that has an allure to what's happening in Hong Kong, right? And also even in the Tibetan territories where there were human rights issues with what China has done in the past. Yep. So it's a very sensitive topic, and it's no surprise that the protesters in Hong Kong massively ramp up their efforts, and they were a bit more violent.
Yeah.
We have protesters being shot by police by
first death, right?
The first death at this point. So things are really escalated, and it's really not looking good for Hong Kong right now.
Yeah. And I think Taiwan got caught up then again too, right? Because he made some noise about that as well.
Yes, the unity plus statements on no external forces can make China be detracted from its aspirations. So Taiwan is part of the unification issue, as usual, and has surfaced in Donald Trump's part of Donald Trump's strategy to annoy the Chinese in the trade war. So things will continue to be like that. Lots of noises. Market did not move that much though.
Not that much. It did move yesterday a little bit, right? But again, I think
on other reasons.
And we're going to get into them here in a second. One of them actually, because it was U.S. markets also quite a bit, right? Let's talk about the Trump impeachment, right? Last week when we spoke, I think it just kind of started, like a couple of days before that.
Yes.
But now it's a little bit more clearer on what happened and what's going on, right? But it's still all over the place.
Yes, we'll get more noises from here. The Democratic hearings have subpoenaed Rudy Giuliani, who's former New York mayor and also a personal attorney for Trump, who was personally involved in the discussion with President Zelensky from Ukraine about investigating into the affairs of Hunter Biden, the son of Joe Biden. And so there's a bit of a controversy there. Mr. Mike Pompeo is still the Secretary of State at the moment in the US, is also been dragged into the props. So things are going to get more noisy. I think the main thing is that the alternative to Trump is very business unfriendly policies that's been presented by Democratic candidates so far, breaking up big firms.
And rhetoric is actually getting more and more, right? Like
yes.
Now they're really...
And also wealth tax, and so I think the alternative actually makes the market a little unhappy or uncertain.
Yeah.
So this impeachment inquiry would hang over the markets for a little while. And again, we want to caution investors not overreacting to the upcoming noise that's about to come from the media. We've been through this before multiple times. And investing is like planting a tree today, growing it, nurturing it, and it's seeded for the long term. So I want to just continue to remind ourselves of
and those are really sentiment-driven things, right? So media-driven things. So usually when the news is out and nothing will happen, then it shoots up pretty quickly too, right? And this is the whole reacting thing, timing these things. It's so difficult because tomorrow there could be a tweet or something and it's all over again, right?
Yes.
So,
or the other thing is that if you heard something, the same thing, same negative thing over and over again, likely the case that the market has already priced it in it.
Yeah.
So reacting to it after you heard it is always a wrong direction.
most likely too late.
Yes.
Yeah.
So just keep that long-term principles in mind and stay focused on the economies.
But so then one other thing, so we know, and you mentioned just economics at the end, right? One other thing that was happening last night, on top of all this, right, I think this also was part of the market moves last night, was the economic slowdown in the US, right? So how are these numbers or the news for the users, how can they actually assess them better?
Well, I mean, there's a lot of noises about a bunch of manufacturing surveys, and like the Chicago PMI and the Richmond Fed manufacturing activity indices. So those are part of the component that normally goes to the leading economic indicators, and so gives you an insight as to sentiments of businesses and also consumer confidence as well, which they have. So there's a broad-based deterioration in the confidence numbers, whether it's business side or the consumer side. But this is not really surprising to us because the trend has been there for a while.
Yes.
And so when we look at the main composite, which is the Conference Board Leading Economic Index, that slowdown index has been happening throughout the year.
Yeah.
We used to be at plus 5-6% year-on-year rate of change, and now we're talking about 1.1%, right? But that's not to be confused with a recession, because the numbers for the US is just saying that we're still growing, we're growing slower, right? So a lot of the sentiments probably affected by the impeachment inquiry. And then the overshadow progresses in trade talks. Actually, we have some solid progresses in the US-China trade talks.
And I think that could be one of those, sparks to actually move once it's done, settled, and moved on from. But anyways, I think that makes, at least it puts a little bit in perspective when people do have the news turned on, right?
Yes.
So completely separate. I think we covered the market stuff, but we do get quite a lot of questions always. About from clients. First of all, they always say, when do you rebalance, right? That's one of them. So I think understanding what rebalancing is one part. And then also, when should I do it, right? Maybe you can shed a little bit of light what rebalancing is in terms of how we see rebalancing versus reoptimization that we already talked about before.
Right. I mean, first of all, rebalancing is about returning your allocations back to target. If you have a portfolio of two asset classes, A and B at 50-50, and A outperforms B by 20%, your rating now would have been 60-40, which deviated from your risk profile and your targets. So the act of returning it is the core of rebalancing. And it's a free service and it's automated service as StashAway. But as to doing it yourself, when is the best time to do it? It's actually not a very straightforward matter.
A lot of people say, you need to do it once a year, right? It's like when you look online on blogs and stuff, right?
Yeah, it's like, why is it 1 year or why is it 3 months? And so there's a lot of arbitrary time window floated around. Rebalancing should never be based on a mechanical time window. It should be based on how much the value has deviated. So if you set a threshold of a geometric band of 20%, and you have a 50-50 allocation between A and B. So when it hits 60, and then when it drops to 40, that's the time to rebalance, right? So, but how do you set those thresholds? It's really an empirical question. And at StashAway, we actually do a lot of back testing, stress testing. We also source a lot of insights from academia articles and university studies, and we have our own threshold for the asset classes in question as to when the rebalancing will be triggered. And in general, the rule is not to rebalance too frequently. And also to let things run a little, but not too far. So it's really a fine balancing act. As StashAway, again, is an automated process. It's numbers driven. Nobody manually decide when to rebalance. Nobody manually decide what threshold you rebalance. It's all data driven.
And I think a lot of people, especially if you're doing monthly contributions, they can help you also to rebalance without having to sell or buy inside the portfolio, right?
Oh, that's right.
So if you just have monthly contributions, you can contribute them to the one that's underweight at that point in time, right? So this also helps for when we tell you guys to always keep doing monthly contributions or quarterly, at least be on a steady savings path, right, towards your goals. Anyways, thanks, Freddy. I think that was super insightful. Yeah, so I think it was very helpful for people, because we do get that question quite a bit. I will be both here next week, so we'll speak to you then, and otherwise have a wonderful week, and as always, leave any comments down below. Thank you so much. Ciao.